Do you think a rate hike next week will put the brakes on this rally, Peter?
Well, you know, the first time the Fed hiked rates, December of, 2015, the markets were giving the Fed the all clear, and then they tanked, right? We got off to the worst start to a year in history, and then the Fed backed off and didn't raise rates again for an entire year. Now, when they raised rates in December last year, it was in the middle of Trump mania, and so they kind of got a pass. But now we'll see. You know, this is a gigantic bubble. It's gotten a lot bigger since we elected Trump. Will this next rate hike prick it? I mean, there's a chance. I mean, eventually the air is going to come out of this bubble. So if it's not this rate hike, it's going to be something else. But, you know, you guys were talking earlier about the U.S. economy, oil prices. The economy is a mess. Look at Atlanta Fed is now looking for 1.2% first quarter GDP. It was at 3.4% February 1st. We are dangerously close to a recession in this country. Demand for gasoline is down. That's why oil prices are going down. And a rate hike is just going to, make the problem worse.
So you're reading the data and you're looking at oil prices and decline that we've seen over the past few days as evidence that there is a slowdown in the U.S. economy. That is the result of a slowdown.
There's a lot of evidence. In fact, if you look beneath those, window dressing for the manufacturing jobs that I think some of the manufacturers maybe added to curry some favor with Trump, look at what happened in retail sales. That could be the beginning of a huge trend. Why are retailers laying off so many people? Because Americans are shopped out. They're loaded up with credit card debt. They're buried under a mountain of auto debt and student loans. A lot of these retailers are going bankrupt, and these minimum wage hikes that we've been getting all around the country are just going to expedite the job losses.
But you've been singing about recession for a long time, and you've also been on both sides of this argument. You've told me a couple of years ago that rates were going to the moon. Now you're telling me there's no economy, we're about to go into recession. Say what you want about pulling jobs forward or that there's the Trump buddy system going on here, but manufacturing jobs and goods-producing jobs were at their best levels this month since 2000. And you get back to the PMIs, you get back to the services sector, and you can't tell me this is an economy that is sputtering here. If anything, the Fed would not be making the noise they're making if they have too much at risk.
Yeah, well, we just printed the highest trade deficit in 5 years. We have the highest inflation in 5 years. It doesn't sound like things are on track. Look, Janet Yellen is always going to try to put a positive spin on everything. But the reality is the economy has barely been growing. And in fact, I think if the government was more honest about the inflation rate, we would have seen that we actually have been in a recession. That's why Donald Trump was elected president, because the economy was so weak, people voted for him. But, the markets are ultimately going to have to come to grips with this. As far as the Fed, look, the Fed wants to pretend that the economy is doing well, but look where we are. Look how long interest rates were at zero, and look how much they barely raised them, since they started talking about it a few years ago.
Where rates were and where, why they were there is yesterday's story. The fact of the matter is, look around the world. There's global expansion. You can't deny it. And the fact that rates are moving higher is a function of that. It's not just the U.S., by the way.
Look, What's moving rates higher is rising. No, it's rising inflation, and inflation is going to go a lot higher, and eventually that's going to push long-term interest rates up. But no, that's not reflation; it is inflation. And look at the dollar. Dollar was down today.
Deflation, and I mean, that was the other.
And meanwhile, foreign stock markets, emerging markets, gold stocks are beating the U.S. market this year. They were beating the U.S. markets last year. In fact, foreign markets are going to beat the U.S. market every year of the Trump presidency.